Tools webinar series. My name is Kinkini Banerjee and I'm the Coalitions Relations Manager at USBC, and I'm so glad to have you join us today. This series was launched by the USBC as part of its training, technical assistance, and capacity building support for the network of state, territorial, tribal, and community breastfeeding coalitions across the United States. We heard from you how important it is to learn about the nuts and bolts of coalition forming and developing. Access to the webinars is open to all interested breastfeeding coalition leaders and members, as well as anyone else involved or interested in forming or leading a nonprofit organization in the breastfeeding field. Our webinar announcements are sent through the coalition's announcement list, and you can join up on our website, www.usbreastfeeding.org/signup. And every session of this series is recorded and archived on the Power Tools webpage. I will go over some housekeeping details. All coalition members can join us for this webinar, and the handouts and relevant resources and recordings will be on the Power Tools webpage. You can go to for today's session, all participants are in listen-only mode, and we'll have about 10 to 15 minutes for Q&A at the end of the session. And if you experience any audio issues during the recording, you can go to office@breastfeeding.org. Now we do encourage your questions, and here's how you do it. So on the right side of your screen, you should see control panel, and if you don't see the control panel, it might be minimized. Just click on the orange tab and it will pop out, and scroll down below, and just below the audio section you'll see a tab for questions. When you click on it, it'll open up a box for you to type your question in. So type your question anytime during the session, and I will make sure to pass it on to our presenter Megan at the Q&A time. And that brings me to today's session. So audio problems, please email office@usbreastfeeding.org. And that brings me to today's session. Our presenter is Megan Renner, the Executive Director of USBC, and Megan is the governance expert extraordinaire, and we know that she has been fielding questions from our coalitions for a long time about how to go through the nuts and bolts of all the work that you need to set up your own coalition nonprofit. So this is a really timely series for you all. And in the first session that we had in March, we talked about starting a nonprofit, filing the articles of incorporation, applying for the exempt status, and registering with your state. Today's session is the nuts and bolts of nonprofit maintenance, and this session will cover the key information and resources you need to ensure that you stay in compliance with the filings and reports required by the state government agencies as well as the IRS. So with that, I'm going to turn it over to Megan Renner. Take it away, Megan.
Wonderful. Thanks, Kinkini. Can you hear me okay?
Yes.
Great. Thank you. So before we get started, I actually saw a suggestion on the questions that I think is a great one. One of our fellow attendees from Texas was actually asking if we could ask who all is on the webinar today, what states you are from. So if everybody can try this out, if you go ahead and type in your state into that questions box, that might be a nice way for us to practice asking questions before we get into the meat of the session, and then we'll read out where you all are from as that's coming in. So while I'm getting back out of my drawing mode here, I got a little carried away with the highlighting. Fabulous. I see many states being chatted. So again, go ahead and chat your state into the questions box. We have folks on today from Texas, Nevada. I see Ohio, Louisiana, Minnesota, California, Kansas, Nevada, Maryland, Oregon, a couple of repeats, Arizona, Georgia, Maine. So wow, we have a really good group here. Very diverse across the different regions. So Thanks, everyone, and welcome again to the second in our Power Tools series. So I'm going to start out with a little bit of overview and background of what, why we're here today, why we're exploring this topic that sounds kind of dull, right? Compliance. And as Kinkini mentioned, we did have the first in the series webinar back in May, where we talked about the startup phase and the different components that coalitions go through, or that nonprofits go through, and coalitions as one type of nonprofit, when they're getting started up with their states and with their federal status with the IRS. And so today we're going to talk about, once you do those startup pieces, what do we need to know, what do we need to understand about both internal requirements and external compliance requirements, both with our state, especially the states of incorporation where we all reside, and with the Internal Revenue Service. So again, I'm going to cover a couple of things, just a couple that we talked about last time in case there's anyone here on the call today who wasn't on that one. One key distinction is this differentiation between nonprofit status and tax-exempt status. This is something that we see confused quite a bit, and it's because most organizations that are nonprofits also wish to get their tax-exempt status from the IRS, but these are actually different processes. They're done at different times, and they're managed by different government agencies. So again, that nonprofit status, that is granted by your state, when you incorporate and form in your state as a nonprofit organization. And then the tax-exempt designation, that's what we often talk about as the 501c3, is one of the most common designations. That's granted by the federal government, and specifically the Internal Revenue Service, our favorite federal agency, right? So that's just something to keep in mind, because I will typically be very careful, especially in the context of these webinars, to use the correct term when we're talking about all these different legal and compliance things. So we talked last time about what it means to become a corporation. Most nonprofits do make this choice to formally incorporate in their state, and that means that state has specific state laws about nonprofits and requirements for that. And so when you form your corporation in the state, you are complying with that state law. You're forming your organizing documents, your articles, your rules of operation, your bylaws, and your policies in compliance with that state law. Similarly, when you become tax exempt, there's federal laws. The U.S. tax code will describe a variety of different rules and regulations and things that tax-exempt organizations need to comply with. And so again, the best known type is that 501c3. That's also referred to quite a lot, especially in the IRS literature. You'll see them talk about public charity. That means us. I know we don't often think of ourselves as coalitions, as charities per se, but that is what they mean. And that tax exemption allows exemption from your federal income tax on your coalition's or your organization's revenue, as well as the ability to solicit tax-deductible contributions from your donors. And so we're going to talk about both of those things a little bit later when we get into the details of IRS requirements. So talking about compliance requirements, once you have received your incorporation status, and there's a couple of different things we'll talk about today. First, we'll talk about preparing for the ongoing compliance requirements expected by your state. And of course, we are a diverse country of 50 different states and territories and more. And so these are going to vary quite a bit. So I'm going to talk about what is common across all states and touch on some of the differences and direct you to resources that can help you to find the really specific nuances that you need to know. You're also going to want to prepare for compliance requirements expected by the IRS. And as we talked about on the last webinar, these IRS requirements may apply to you even before you ever actually do your application for tax-exempt status. And even if you never do an application to the IRS for tax-exempt status, they do still now expect that all nonprofits will at least do some basic filings. So we're going to talk about that a little bit later as well. Of course, failing to meet these requirements can have some consequences. We'll talk about what those are as well, and that's, of course, the reason why we're doing this webinar today. And I'll also talk about two different categories of compliance requirements, both internal and external. So first, we're going to talk about the nuts and bolts of the state requirements, what is imposed upon you by your individual state. And so I'm going to start off with internal requirements to the state. And what do I mean by internal requirements? These are actions that must be taken within the organization, within the corporation, usually by the directors, which is the legal word for your board, or by your members sometimes. And these internal requirements are often more commonly overlooked than the external ones, I would say, but they must be documented as part of your organizational records and your organizational archives. And you need to know about these because in the event of a lawsuit, or if further down the line you're going to dissolve the organization and transfer its assets to another organization, or if you're going to merge with another nonprofit, those types of big activities, you might need to present these records. So that's part of the reason why they're very important. But those things are rare, right? So that's why sometimes we overlook some of these things. So what's typical? Again, every state is a little bit different, but this is a helpful summary of what is typical for internal requirements in the state. You're going to want to be familiar with your own state's nonprofit law and ensure that your governing documents and practices are in compliance. We talked about that on the last webinar. Some of these might be ensuring that you have annual membership meetings, that those, as well as your board meetings, are held meeting your state law minimums, the number of times per year, as well as things like notice requirements. More often, you want to have a lowest common denominator of, okay, we have to have an annual meeting once a year, so you would put in your bylaws, we're going to have an annual meeting at least once a year. I wouldn't recommend stating in your bylaws that you're going to do it 5 times a year because you may not actually meet that. So you probably want to stick with the lowest common denominator for your state law. And then if you happen to have more membership meetings, that's great. But you want to especially make sure you're complying with the state law minimums and with whatever you say in your bylaws. You also want to make sure that you're adopting and maintaining updated bylaws. If there are other things in those bylaws that you're not complying with, or maybe have never complied with, sometimes that happens, I know. So, if you're at a place where your board is sitting down and looking at those bylaws and going, gosh, we haven't done this in 5 years, you probably want to change those bylaws, first of all, to match the true way that you are going about business and that you have the capacity to go about your business. But you also want to make sure as quickly as possible that you resolve any areas where you're not in compliance. So whether that means that you need to go and take some steps to comply, or whether that means that you are doing an amendment, either of those can work. But you want to make sure that you're complying with what you said. And then secondly, also maintaining minutes. And that's minutes both for your membership meetings and for your board meetings. Both of those types of meeting minutes are important. So I do have a little disclaimer here. This is not an exhaustive list of every internal requirement that a state might have. These are the typical ones. But again, you do want to check your state law and be sure that you're familiar with that, or that somebody in your organization, maybe it's a governance committee, is familiar with that and making sure that you are staying up to date. External requirements might be imposed by the state in which you're incorporated. That's most common. They also could be imposed by a state where you are registered to transact business. And when you're doing business in the state in which you are not incorporated, not your state of formation, you're typically going to see that called a foreign corporation. And this really threw me for a loop the first time I saw this. USBC, when we moved from North Carolina to D.C. Several years ago, and I had to go down to the D.C. regulatory agency and get our stuff filed, and they said, well, you have to go to the Division of Foreign Corporations. And I said, but we're not foreign, we're from the United States. But that's what they call it when you're actually we're formed in another state, and then you go do business in a second state. You're going to be called a foreign corporation by that state. So here's an example of this, and this may not apply for most of you because I know many folks on these calls are coalitions in one particular state. But I know there are some of you who might be part of a metropolitan area that touches on 2 or 3 different states. Maybe you might be a regional organization or even a national. I know we have opened up this webinar to others as well. So this could apply to you in a few different ways. And so here's the USBC example to see how this might be. So for example, USBC, we are originally incorporated in Florida. That's our state of origin. But we're headquartered in D.C., so that's where we are doing business in D.C. We have meetings in Virginia, for which we have filed for sales tax exemption in that state, which triggers us to be recognized there. And then we have employees in multiple other states, so just to be really tricky. And so each of these different states that we do some sort of business in requires us to meet different requirements. The good news is that when you are a foreign corporation or when you're doing only one specific type of thing, especially if that's not your headquarters state, those requirements are likely to be less or at least different for the foreign corporation situation. So that's something to be aware of, and may not apply to most of you, but good to be aware of that if you go and do anything with a state agency in another state, you might trigger them to say, wait a minute, who are you and why are you here? And these are the types of examples of what that might look like. So again, what's typical then for your state of incorporation, for your main state? Most states do require an annual filing. It's usually called your annual report or an annual statement. Some of them are biennial. So every 2 years, and D.C. is one example of those. They actually call it their 2-year report. So that's most common. Almost every state is going to require that. There are a few also, I have seen, California and Nevada, that also require an initial report to be filed within the early months right after incorporation, but that's not as common. And then many states, actually, it's up to 40 now, require charitable solicitation registration before a nonprofit solicits contributions. Or this also could trigger when your annual contribution amount exceeds a certain ceiling. So we're going to talk about a lot more of those details and exemptions and exclusions a bit later. The other thing that it typically does trigger this requirement is if you have fundraising activities where you are having paid solicitors, paid fundraising counsels, special fundraising consultant firms, that sort of thing is also going to trigger this solicitation registration. So before we get into the details of those different requirements, I'm going to tell you a bit about the consequences. And again, we're talking about state filings here. So there are 2 primary scenarios for noncompliance in the state level. One is bad standing, and one is called piercing the corporate veil. So what do these mean? Bad standing means if you're not meeting your annual report obligations or other obligations with your state, you might be they might call you in bad standing with the state. Usually we hear about this the other way, right? When I file our annual report to Florida, they send me a new certificate of good standing or certificate of good status. So this is just what happens if you don't. And the consequences could be, you might just have some late fees. You filed your report a month late, had to pay $25, something like that. You might have to have a reinstatement fee if it was a little bit longer and it gets past being late into being revoked and reinstated. That can also happen. Again, it's a revocation of your corporate status with the state, and even as far as administrative dissolution. If you are completely non-responsive for a period of time, the state might say, okay, this organization doesn't exist anymore. We are dissolving it from our records. So that's what that would mean. But usually, if it lapses, you can go and get it reinstated, and you might have a fee, some sort of a thing, but it's not going to get that far. Piercing the corporate veil is a little bit different and much more rare, surely. But what this means is if your organization were to be sued and you were not able to show that you'd met all the corporate formalities, all of the things in your nonprofit corporation law, like holding your annual meetings and so forth, or you hadn't met all your state requirements, like filing your annual reports, a judge could rule that your organization has been acting more like a sole proprietor or a general partnership in certain cases. And so that would mean piercing the corporate veil, which is that your liability protection that you have for being a corporation disappears. And that liability comes back from the corporation to the individual directors on your board. And so that could mean that your individual board members' assets would be vulnerable in the event of a lawsuit. Very, very rare, but just a few things that we mentioned down here then in the second bullet of ways to avoid this happening. Obviously, you want to show separation between your directors, your board, and the organization. So that means you have a business bank account in the organization's name with the organization's tax ID, for example. That means that when you transact business, if let's say you have a contract with a hotel to hold a meeting, that contract is in the name of the organization, not an individual board member. You want to satisfy all your ongoing requirements as a corporation to the state, holding your annual meetings, those type of things, to make sure that you are really being seen as an entity. It's not just that there's one or two board members running about and there's not really an organization behind them. That's what it could look like if you're not holding annual meetings and you're not having board meetings. That's where this could come into play if you're not meeting those obligations to really show we are an entity, we are a corporation, rather than just one or two individuals. So that's what that all means. And as long as you are keeping that separation and maintaining your compliance requirements, this should never be an issue. But this is the worst case scenario. So now I'm going to show you what do we do to avoid this. It's actually not too bad, not a big deal at all. So we're going to talk about the nuts and bolts of that state annual report and what that typically looks like. Just a bit of overview. These reports allow the state to track and monitor the formed or qualified corporations in their state. They might want to have a sense of how many nonprofits do we have running around here in Illinois, and what are they doing, and how big are they, that type of information. And so there's usually a corresponding fee for these, ranging from $10 to $300 is what we've seen typically. And they can have due dates that are either tied to the anniversary of your original incorporation. So if you originally filed your articles of incorporation in September, henceforth you will always renew in September. Or they could have a particular due date for every single corporation in the state. So DC as an example, they have that 2-year report, and it's due, I believe I think it's January, but don't quote me on that. That's when we've done it in the past. So it could be either anniversary or a regular annual due date that's always the same. So again, like we talked about last time, you want to do your research. You want to make sure you know what the specific requirements are for your state, because again, these procedures vary. Once you get incorporated initially, you should be receiving notices reminding you of this requirement, whether by mail or email, maybe even both, so that you know what's required. If you're not receiving those notices, if somehow nobody in your board is aware of this, it could be that the information the state has about you is not up to date, and so you might want to check in and make sure. So if you don't have those reminder notices, or if you've never done this before, how would you go and find out what are the requirements? You would want to go to your Secretary of State's or Attorney General's office and find out about your state's procedures. And there's a link here that you'll have. All of these links in the slides will be live. That takes you to a directory of the state nonprofit filing offices. So that'll be a quick way to find the entity for your state. Typically, it's going to be called the Division of Corporations, something like that. They'll have the form there. They'll have the guide, or, information that you need. And if all else fails, just call them. They're usually very helpful, and folks are there who know how to walk you through the process. What's asked in the annual report, and it's usually really, really simple. I just did our Florida one a couple weeks ago, and literally it was just this. And often they have it where they they regurgitate the information you gave them last year, and all you're doing is updating things that might have changed. So for example, you'll have your key information like your ID number, your tax ID number, your addresses, your registered agent, if you have one, Your board is typically, that's the piece that I usually spend the most amount of time doing this each year. It takes 30 seconds to look at the other information, then it takes 5 minutes to update the board's officers and directors' names. They typically do ask for the board members' contact information, their personal addresses. So that takes a little bit of time to update, but that's usually the meat of it. And then the purpose statement of the organization, again, something that's usually pulled in, and if you need to update it in any way, but usually it's just confirm, confirm. A small note that if you are needing to change the organization's official name with the state, or if you're wanting to amend the Articles of Incorporation, typically also if you're going to change the registered agent, sometimes those things require a separate form, maybe even a separate small fee. So just be aware of that. But the key information like your address, your officers and directors, that stuff, you just update on the annual report. So pretty simple. Just as a reminder, we talked about registered agents last time, but for those who might not be familiar, your registered agent is usually an individual or an entity. There are businesses that act as registered agents, service companies, and you would appoint this registered agent, somebody that has to have a business address, a mailing address that's not a P.O. box, living within that state. And that registered agent would be designated to receive any important legal or tax documents. If you get a summons to testify in a lawsuit, or if you, as an example, that paperwork from your state about your annual report, that's going to your registered agent. So that could be why, if you haven't seen that paperwork, it might be that your registered agent needs updating. But those official legal notifications coming to the corporation go to that registered agent. And this, again, this is something where there are companies that act in this manner. Lawyers do it as well. For a small fee per year, you can pay someone to do this. We actually use a service called Biz Filings at USBC for one of our states. And Biz Filings is an entity that does this for all 50 states, so they can be registered agents for anywhere. So if you're interested in looking up that, it's a small fee, something like $250 a year, something like that, to use that service. And it's Biz, B-I-Z, filings, plural.com. So that's an option if you don't want to have it be an individual. So that's annual reports. That's really all there is to it. There might be, again, in different states, some different specific requirements, but typically it's relatively simple, and you fill out the form and submit a small fee, and you're done. The next piece here is a little bit more complicated, and that is the state charitable solicitation registration. We also started to talk about this very briefly on the March webinar, but here's where we're going to get a lot more into the details, the nuts and bolts here. So what is this all about, Megan? This is typically a different law. It's typically not within the nonprofit law, but a separate law that a state has passed regulating the solicitation of funds from the general public. And this is a way for states to track the solicitation of charitable contributions, to monitor things like fraud and abuse, how funds are being used. It's typically something that is set up and can also be, incidentally, a source of revenue for the state, because they're going to charge you some fees for this regulation. And they will require comprehensive reporting by nonprofits as well as by fundraising firms or consultants. So think of this like lobbyists. Lobbyists typically have to register and pay fees, whether they're registering federally or whether they're registering with your state legislature. They are monitored, they are regulated, they are tracked. Same thing here. If you're a fundraising firm or a consultant, those entities are regulated and tracked by these charitable solicitation laws. So this compliance reporting is going to look like two different components. There will be an initial registration that you do to start out, and that's just providing the initial basis of data about your organization, your finances, your governance around fundraising. And then typically, again, there are 40 states that have this right now. Typically, most of them also have an annual financial reporting requirement that keeps the state up to date. And it's going to have an emphasis on fundraising results and practices again. It's going to be different than the annual report, but be more focused on fundraising. That annual reporting can range anywhere from, send us a copy of your 990 and that's it, to filling out, an 8-page form. It, again, varies quite a bit. But before we talk about what's common amongst them all, I'm going to tell you a little bit more about whether you even have to do it. So you might be panicking going, I've never heard of this before, but there are some exemptions and exclusions that might cover many state coalitions right now. So let's talk about that first. So who has to do this registration? Generally, any nonprofit conducting solicitation of charitable donations within the borders of the state is subject to that state's law. And technically, you're required to register before you do any solicitation. And that solicitation could be a letter, a phone call. It could be placing a newspaper ad requesting financial support. In the legal opinion of the states, any of those things is going to trigger the jurisdiction of the solicitation law. The tricky part is internet fundraising. And that just has thrown a wrench into the works. It really doesn't neatly conform to existing models of jurisdiction, right? Because you could put on something on your website that requests donations, and maybe you're in Texas and I'm here in Illinois, and I decide to give you a donation. Gosh, you reached so many more people, and you weren't really trying to target me here in another state, but it can happen. So internet fundraising is a little bit different. And the way that they ultimately look at it is, roughly the question is asked, have you purposefully directed a solicitation to a resident of another state? And in the case I just described where, Texas put up a donate button on their website and I over here in Illinois said, oh, cool, I'm going to donate. You didn't purposefully direct that solicitation to me. So in that case, Illinois would not have a rationale for saying that they had jurisdiction over that. But again, that's just an example that gets real fuzzy in cyberspace. And so for that reason, this organization called NASCO, the National Association of State Charity Officials, those guys, all those different charitable officials from all the different states got together and came up with something called the Charleston Principles, which I put a link to here. If you're very concerned about internet fundraising, where you feel like you're getting donations from more than one state, I would suggest going and looking at these Charleston Principles. For example, again using USBC as an example, what this says about us, since we do technically direct fundraising solicitations to all 50 states, and we do because we have people on our list from all 50 states and we ask you all for money, we are technically required to file this registration in all 40 states that have a law. So not very fun for us at all. But again, for most of you who are state-specific coalitions, you're really only going to have to worry about your one state. Again, if it's something you're really concerned about, you've got the link here, and you can access those Charleston Principles and see a little bit more about what that says. If you'd like to chat about it more, please feel free to reach out to me, because again, it's something I've been fussing with for some time. But I am hopeful that for most of you, it's not going to apply, because again, you're specific to one state. So getting back to just the one state situation, though, there are a number of possible exclusions that will also get you off the hook. This is, again, it's a patchwork, different from state to state, and it's really a product of every state's constitutional principles and political considerations, right? That sounds familiar. Just like breastfeeding laws being a patchwork of political considerations, same thing goes here. Every state right now does grant an exemption or an exclusion from the law altogether to religious organizations, and of course they have different definitions of that. Most have exemptions for colleges, universities, and then most have an exemption for small organizations. So if you're raising less than $5,000 of donations, you are likely to be exempt in many of those 40 states. So I put a link here. This is an appendix of a document called the Unified Registration Statement that has details on every single state that has a law, including this whole list. The appendix has the fees. It has the attachments that would be required. It has details about the exemptions and the specific language of the laws. So this is a great place to just go and look and find very quickly what is the status in your state. The Unified Registration Statement is published, again, by that organization, NASCO, the state charity officials, and they have put together this form as an attempt to, for organizations like us at USBC, where we have to file in 40 states, they put together this one unified form where they've tried to combine all the commonalities of the 40 states into one form to make it easier for us to do the initial registration. So that appendix is a handy resource for you all. But again, if you are just doing one state, then go ahead and look at that appendix, check out the details that it says, and actually they have just updated it in April. So it's a brand new version. But still, I want you to confirm with your state the final details, because the laws get tweaked a lot. So this particular version is up to date as of a month ago, but you never know. In May, Massachusetts might update the law, and it could change. So do use this as a resource, but make sure you also get in touch with your state office and that you know the right information for your state. And so here's some information on how to do that research. Again, the procedures for these reports are going to vary. Usually there's, again, a corresponding fee for the registration, maybe also for the annual filing, ranging from everywhere from $10 to $325 was the highest one that I saw. But those high fees are a sliding scale where there's millions of dollars in revenue. So you're not going to have those. Don't panic. Most of the fees that I saw were, $10 to $25, maybe $100. So, that's more likely what you're going to see. Those $250, $300 ones are sliding scale where we're very, very large organizations. Again, it varies, but most have a set deadline that's usually, either 4.5 months or 6 months after fiscal year end. So that translates either to May 15th or June 30th. Many of them do have extension allowances. So for example, here at USBC, we don't actually file our 990 on May 15th. We file for an extension with the IRS so that we don't have to file to the IRS until November 15th. And then typically, the state agencies will allow a similar extension. So just another thing to go and check out your state website and find out if that's something you're interested in. That can help you out. And usually it's a very simple thing, like you send an email to them saying, I'd like to request an extension. And they write back and say, OK, your new deadline is this. So that's also a helpful thing to know. Here is a different list, this link of how to check with your state. This NASCO list of the state charity offices is the place to go to take you directly to the agency in your state government that regulates this. And then again, just like with the annual reports, once you do that initial registration, you should start receiving notices by mail and email about when you're next due. So that will be helpful once you get in the system. So then we get to the question of what are they going to ask in this form? And it's a little bit different, but not horrendously complicated either. There'll be some similar questions about your key organizational info. There will be some new questions about whether there's been any past legal action, injunctions, revocations of your registration, things like that, any previous or other registrations in other states, that sort of thing. They'll have different questions about your solicitation methods and practices, and that's where the questions get into the questions of whether you pay outside fundraising counsel. So that's something to be very careful and to read very carefully, because if you do pay external firms or consultants to do fundraising for you, answering those questions yes is likely to trigger additional questions about, are those outside fundraising consultants registered with the state? So again, just like a lobbyist. So if you have people like that, if you're working with a firm, talk to them about this first, before you answer those questions, and just make sure that you are answering it correctly and accurately reflecting what the relationship is there. So you'll see questions like that. You'll also see questions about describing what's the purpose that you're asking for funds. And then you'll also have some information about the individuals who are your officers, directors, and here they will likely also pull in the principal salaried executives. And then they'll ask you questions about whether these people have any conflicts of interest. So that's where it's helpful to have a conflict of interest policy and disclosure for your board. Always something good to have. And they'll also ask about the criminal history of those individuals, whether they've ever had a misdemeanor or a felony. So that was a fun one. The first time I had to email the USBC board and say, okay, has anybody ever been convicted of a felony or a misdemeanor? So, trying to figure out a way to subtly ask that question and make sure I have the right information to be, because you want to make sure that you're answering these questions accurately, of course. So you'll have those about those individual folks, and then you'll also have some questions about your financial practices. That'll be things like who signs your checks, who has custody of your financial records, that sort of thing. And then some other things that you would submit, there will typically be some sort of financial reporting data that they ask for. It could be that it's just fields on the form where they ask for, your total number of contributions in that previous year, total expenses, maybe a breakdown of expenses between program service, management and administration type expenses, as well as fundraising expenses. That's one where they're really going to be keen on knowing how much money do you spend on fundraising, because again, that would potentially trigger, gosh, they're spending $50,000 a year on fundraising expenses, but they say they don't have any paid fundraising counsel. How can, that's what they're looking for here, is where do they need to be regulating and monitoring fundraising activities. So they'll ask them some financial data, and then typically when you do the initial registration filing, you'll have to attach your articles, your bylaws, your IRS letter, if you have it, if you're tax exempt. And then typically when you do your annual filings, you'll be required to attach your 990, which again is where I again file that extension for the 990 for USBC, and so we typically do an extension for the annual filing to the state as well, so that we're giving them the most recent 990. In the event that your 990 deadline is later and the state does not give you an extension, you can also just send them your most recent completed one, and they will accept that. And then you'll just have to send them the updated 990 when, as soon as it's available, so that they generally will understand that. So consequences here, I've set this one up differently because it's a different law than the state nonprofit law, and so the consequences can be a little bit different. And I just want to tell you, there are many, many nonprofits, and you'll see this in the Unified Registration Statement and the NASCO website. There's lots of folks who have not done this legal homework before they launch their fundraising campaigns. Although they say, technically, to be in compliance, you're supposed to register with the state before you ever solicit any funds. Lots and lots of organizations have not done that and didn't even know. So, and that includes USBC originally. When we were not aware of this in the earlier years, we did not know. So if that's you, yes, you should be concerned, but don't be deterred from going ahead and doing the registration. And everybody says this, the state charity officials, the state will tell you this. Generally, their only goal is to encourage honest compliance, and they just want you to go ahead and do it as soon as you find out that you need to. And so if you're able to demonstrate in good faith that as soon as you discover the obligation, you went ahead and registered and filled out the form, then you'll be fine. They will not sanction you if you go ahead and comply. And in fact, as I said, that was exactly the situation with USBC when we found out that we needed to do this. And then when we found out we needed to do it in more states, we just went ahead and filled out the forms and submitted it, and nobody ever questioned or said, oh, nobody asked us about back years or anything like that. So just, again, the bottom line, just comply as soon as possible, and all will be okay. And again, it's very likely that most state coalitions are going to be exempt in many situations because of those exclusions for smaller organizations. So check that out first, because it may mean that you don't even have to consider complying or filing the registration until you cross that threshold, and the threshold is different for every state. So check that out first. I'm going to stop here because we're at the end of the state coalition piece and see if we have any questions specific to the state part before I move on. Just going to glance at the thing. We have some new ads from Pennsylvania. Let's see. So somebody was asking a bit ago, where do we go to find the state laws requirements? And I think they were referring to the annual report at that moment. That might have been before we showed that link. But there is a link in the slides, and the slides are posted on the Power Tools website that takes you to there's two different links. There's one link for the list of all the state nonprofit business offices, and then there's the second link that takes you to the state charitable officials. And those two links will take you to the right place for the two different types of filings, the annual report or the charitable solicitation registration. That is a mouthful. I think those are the only questions we have at the moment. Let me see. Somebody might have their hand up, too. Let me do a quick glance here. I see a hand. Where are you? Oh, maybe not. Okay. Just so folks know, we don't have a huge webinar for these, or a huge audience for these webinars. So if you'd like to ask a question verbally, you're also welcome to do that. We have turned on hand raising for today, and you would just do that on your webinar control panel. You would click the little icon that looks like a hand. So if anybody would like to ask a question that way, you're welcome to as well. Oh, here, I see it. Kay Scamahorn, I see your hand is raised, and I'm going to unmute you. Did you want to ask a question? Kay, are you there? Or you might have your phone muted, possibly. All right, we're not hearing her. So, all right. Well, Kay, if you do hear us and you want to type in your question into the questions box, we can also ask a question that way. So either way. All right. So let's move on then and talk about the IRS. A different group of compliance things to discuss here. Move the slide here. So we talked last time, again, we touched very briefly on the Form 990 on the last webinar because the deadline was looming, and we wanted to get a little bit of information out about that. And we ran by this question of the IRS requirements in these three areas. There's record keeping, there's the annual filing, which is the 990, and then there's also some different disclosure requirements. So I'm going to talk in a little more detail about each of these three areas today, but I really want to emphasize this link here, these online training courses that they have at stateexempt.org. I have not done enormous detail about some of these things that the IRS has done because really they are the key source of information. So for things like the major details of the full 990 form, some of those things, I really emphasize to go to the Stay Exempt website, and they have lots of great information, videos and tutorials and trainings from the IRS themselves. So that's a great resource. There's also this publication 4221-PC that is a compliance guide. Again, they call us public charities, although we don't always think of ourselves that way. That's what they call it at the IRS for a 501c3 organization. So check out that publication as well on the IRS site, and both of those should have some helpful info. So I'm going to touch first on record keeping, and again, here we're talking about, this is internal requirements, right? The record keeping components, the things that underpin your filings, that's internal activities that you conduct within the organization. And then the external requirement here, of course, is your filing, your 990. So what types of books and records do you have to maintain to show that you're in compliance with the IRS, with the U.S. tax rules for nonprofits? And they talk about these first three: program evaluation records. You want to have some documentation of the success of your activities, whether you're achieving the desired results. For example, there's a space on the Form 990 where you describe each of your programs. And that's part of the public. You're reporting to the public on what you do with your money and with your money that is tax exempt. There's, of course, budgetary monitoring as well. You should have your board approving your annual budget, and then you should have income and expenses tracked and monitored to ensure that you're operating within that budget. Or if you are exceeding the budget in one way or another, you should keep some documentation of why and what happened. And typically that budgetary monitoring can be subsumed within the records that are your financial statements. And so those records would support your income, expenses, credits, the information you report, the numbers, the numerical data you report on your 990 should map back to your financial statements. So that's all, pretty common sense, right? A couple of additional things that are not as common, or we may not think about. You're also going to want to keep records identifying the sources of your receipts or your revenue. And in particular, that's going to be a list of your donors and grantors and the amounts that you are received from each of them. Or if they are non-cash contributions, like somebody made an in-kind contribution of a desk or a computer, you want to keep a description of those. Where you're going to need to report to the IRS is only going to be donors that are greater than $5,000 in a particular year. But you still want to keep a list of all these individual donors and how much they gave and their name in there and the amount. So you'll keep that list, but what you'll actually require to report to the IRS is the ones that are $5,000 or more, and those you would report individually to the IRS. Then this is probably rare for our type of organizations, but if you are giving out grants from your coalition to individuals, there are some additional record-keeping requirements there, including keeping case histories to demonstrate that those grants, that those funds you gave to an individual were serving your charitable purpose. The case history of the name, the purpose, the manner of selection of those individuals, and any relationship that that individual recipient has with anybody connected to the organization, members, officers, trustees, donors, and so on. So that's, you can see there what that's protecting against to make sure you're not, laundering tax-free money through a nonprofit organization and to give it out to somebody else. That's very clearly what they're trying to prevent there. So a few other considerations about your record keeping. You're going to typically want to have supporting documentation for all of your transactions, your grant awards, invoices, receipts, deposits, canceled checks, all of that good stuff. It's important to keep that because it supports the entries in your financial statements as well as on your 990, your information returns. And you're going to want to keep those organized by year, keep in a safe place, because those records have to be available for inspection by the IRS. And you're probably going to ask me, well, for how long? So I'm going to tell you what I found on that question, that nonprofits must keep records for federal tax purposes for as long as they may be needed to document evidence of compliance. So generally that means that you have to keep the records and the supporting documentation until the statute of limitations runs out on that particular 990. And that is when generally 3 years after the date the return is due or filed, whichever is later. So that's what they say in terms of the IRS, 3 years after the date that the return is due or filed. There could be other reasons why you're required to retain records longer for other reasons, but that's in terms of IRS compliance, that's what the requirement is. But, so let's talk next about that annual filing, the second component of IRS requirements. And as we talked about last time, the annual return is known as the 990 series because there are several forms that use it. And so I'm going to actually launch a poll to you guys. I want to get a sense of where we all fall. So let me see. You should be seeing a poll on your screen that's asking where your organizations fall in this chart with your gross annual receipts, if they're less than 50,000, between 50 and 200,000, or greater than 200,000. So far, we have 100% at the lowest. Now we're having a couple in the middle. See if I can see what you guys are seeing. Okay, I'm going to give it another couple seconds. Okay, so right now we're at 90% in the smallest grouping, the less than 50,000, and 10% between 50 and 200K. So, okay, so that's about what I expected. I'm going to go ahead and turn off the poll so you guys can see my screen again. So it looks like 90% of you are going to fall in this top row where you are just required to file the 990-N, which is called the e-Postcard. So rejoice, because that's really super simple and not a big deal. The second grouping of you, the 10%, is going to be, it sounds like, in the realm to file the 990-EV, which is aptly named because it is easier than the full 990. So I would also say to you guys, rejoice, because we're now in the realm of never being able to file an EV again. So I do miss those days. So we'll talk a little bit about both of those, as well as some other resources that you can go to help you out if you're needing to file either the EZ or the full 990. You'll certainly going to want some additional resources and support. So here's at the bottom, I want to emphasize this important note again. Even if your organization has never applied to the IRS for tax-exempt status, once you are incorporated officially, and remember you incorporate with your state, once you have formed and filed articles of incorporation in your state, you are required to file at least that 990N e-Postcard. This is a little bit newer. Just a couple of years ago, the IRS got a little bit angsty about all the different nonprofits out there that they didn't know whether they were still functioning and wanted to clean up the records, wanted to clean up the listings. And so they changed these requirements, and they actually did a mass revocation of lots of different nonprofits that they hadn't heard from in several years. So that's where this comes from. So just to be aware, even if you've never talked to the IRS before at all and have no intention of ever filing for tax-exempt status, you should be aware of this, and you should be filing that postcard. So we'll talk about that and what that means here in just the next couple of slides. So the e-Postcard is due annually by the 15th day of the 5th month after your fiscal year. So assuming most of you are December 31st year end, that's May 15th. For the e-Postcard, if you don't file on time, they might send you reminders. In fact, I had done a fake e-Postcard at one point to just see what it was like, and I got reminders once a week for a good while. It was getting a little annoying. So they will certainly remind you, but you're not going to get a late penalty. So don't stress. But if you fail to file an e-Postcard for 3 consecutive years, you will automatically be revoked, your tax-exempt status, if you have it. So that's, again, where, as I said a few years ago, with the organizations that they hadn't heard from in several years, they revoked them. And if they really did still exist, they had to go through the whole rigmarole of getting reinstated, which is not fun. You'd rather fill out the postcard, I promise. So if then you get to the rare situation where if you've not yet applied for tax-exempt status, if you are a new entity, or if your application is still pending, you're going to have a hard time filing the e-postcard because they're not going to know who you are. You're going to try to do it, and they're not going to recognize you, and you're not going to have an account. So what they say to do is to have an officer of your organization call this number and ask them to set up an account for you to allow you to file the e-postcard. So simple thing to do. It's just if you're in that weird limbo, just call them up. So what does a 990 e-postcard ask? And this, again, I think this might be the simplest one of all the different reports we've talked about today. They just ask for your name and mailing address, your employer ID number, and you do need to have one of those. If you don't have it yet, you'll have to request one, which is also a very simple process that you can do directly on the IRS website in no time. You'll have to give them a name and address of a principal officer, likely your chair or your treasurer. One of those two folks is probably the one filing the e-postcard for the organization. You're going to have to tell them what your tax year is, and you're going to have to answer 2 yes or no questions. Are your gross receipts still normally $50,000 or less? Yes or no. And have you terminated or gone out of business? Yes or no. And that is it. Super simple. I've put the link here at the bottom that is the web page with the filing link that takes you to the e-postcard system. It's all online, as well as FAQs about it. And so again, it's when in doubt, you do need to do this. So before we go on to the other ways to get help, I just want to address, so for the folks that are required to do the easy or the full 990, when you get to that level, you're probably having some sort of professional person doing your books and possibly also doing your filing. If you don't have somebody doing that or somebody who has experience with it, these are just a couple of ideas of ways that you can find somebody who's a professional to help you with that. And we, certainly in the nonprofit world, it's often not hard to find people who can either donate their time or do this work at a reduced cost. There might be legal aid organizations. There might be accounting companies in your community who do this type of work, whether at pro bono or at a reduced rate. And you can typically find accounting services for a nonprofit at a very reasonable rate. You don't need to feel like you can't have any help with this unless you hire a full-time CFO. That's just not realistic. And so, for example, at USBC, we pay a firm that provides accountants that do our books, but those accountants also work on multiple other clients. And so we just buy a small portion of their time, and for a few $1,000s a year, as we're getting a little bit bigger now, we just have that portion of those people's time, and we don't have to have a full-time person on our staff to do financials. So I really recommend that, and I would recommend talking to other local nonprofits if you're getting to this point where you feel like you need help with your books and with your 990. Talk to other nonprofits that are in your state or in your community, and they can probably refer you to who they use. Again, it's likely to be local folks, local accountants who could help you with this. A couple of other resources here, this Foundation Center directory, as well as something called the Pro Bono Partnership, can also be helpful resources when dealing with legal and tax and accounting issues as well. So next we're going to talk about that third component of IRS compliance, which is this whole set of disclosure requirements, which sounds daunting, but it's actually not so bad. The first component is about public inspection. And you may be aware of this already, that nonprofits are required to make certain documents available for public inspection, including copying. You can charge a reasonable cost for copying, but not more than what the IRS charges. There's some other little details around that. And these documents are your IRS exemption application, if you have tax exemption, including any attachments to it, and the official ruling letter that the IRS gives you when they say you are tax exempt. Also, your annual information returns, your 990s, with the exception that if you have a list of contributors, and remember I said you only have to report them on this Schedule B if they're $5,000 or more. You don't have to publicly display that list ever. That's the one piece of the 990 that is not required for public inspection, is that Schedule B list of contributors. And in fact, they even recommend that if you are required to send your 990 to your state with some of these other filings, they recommend that you take out the Schedule B there, and the state does not have to require that you give it to them. It is not intended to be public, because you might have major donors, you might have anonymous donors, and for that sort of reason, they don't require it. And then this other piece, Form 990T, probably not applicable to most of you, but there are some special requirements around unrelated business income, and that means unrelated to your exempt purpose. So if you are doing some other type of activities or programs that are not justifiable under your exempt purposes as you've defined them, which are likely educational in nature, public health, educational purposes. If you're doing something else and making income off of it that doesn't fit, you might have to file this Form 990T, and there's just some different components around it. And if you do file it, you would have to disclose it. But again, that wouldn't apply for those filing the e-Postcard, because the e-Postcard is just that's it. It's done. There's no schedules or anything that you attach to it. Just the 5 questions. Another component, which is probably not very common for us, but if you are offering to sell or soliciting money for information or services that are available free from the federal government, you are required to disclose at the time of your solicitation that that is a free service provided by the government. So I can't imagine that anybody is doing something like this, but for example, if you were going to go out and try to sell a copy of the business case for breastfeeding booklet, you would have to disclose that it's a free service provided by the government or a free good provided by the government. So just to be aware of that. If you intentionally disregard it, there's a penalty, but pretty uncommon. This last component, though, I know is one that we get a lot of questions about and can be tricky to navigate some of the details of it, and that's around disclosure of charitable contributions. So as we talked about, nonprofits that receive their tax-exempt status, not only does that mean you're exempt from income tax on your organizational income, your revenue, but it also means that your donors can claim their donations to you as a tax deduction on their personal income tax returns. So a couple of different disclosure components here. One is, and these are both related to the donor's requirements. What does the donor have to do to take that tax deduction? And in terms of the donor's record keeping, they can't claim that tax deduction for a monetary contribution unless they have a record of it. And that could be in the form of the bank record, their canceled check, their credit card statement, or it could be a written communication from you, the charity. And so that's for any donations. They have to have at least some record showing that it occurred. But then there's a higher bar of substantiation that applies to contributions greater than $250. And a donor can't claim those as a tax deduction unless they must have to have a contemporaneous written acknowledgement from you. So that's where you don't have to provide those for everyone, but if you don't give it for the $250 or more, they can't claim it. they could substantiate the $200 to $249 and less. They could substantiate that and claim it as a tax deduction just with their bank record. But if it's $250 or more, they must have that record acknowledging it from you. So here's just some considerations around acknowledging those charitable contributions. We would recommend, of course, that you assist the donor by providing a written statement showing the name of you, the charity, the date and amount of the cash contributions. If it's a non-cash contribution, again, they donated a computer or a desk or something like that, they donated their time, then you would list a description of that non-cash contribution. And this acknowledgement should typically state, and there's some language, and we're going to actually post a sample of a USBC donation acknowledgement on the website for the Power Tools. There's a particular statement that you say that says, no goods or services were provided in consideration for this contribution. So you're not, they're not getting anything from you for making this donation. You can do this acknowledgement as a letter, a postcard. It can be a computer-generated form. It can be a paper copy, or it can be an email. And so it's totally fine if this is an emailed acknowledgement that is. Sometimes these can be automated by different web systems that take donations. That's a really easy way to keep down the administrative burden on you. If there's an electronic automated way to do it. But then, of course, if you get a check payment, then you'll have to either send an email or a paper copy and with your template. So one other nuance of these, and that's about what's called a quid pro quo contribution. And that means that a contribution is made by a donor in exchange for some goods or services. And in that situation, the donor can only take that deduction of the contribution to the extent that the contribution, the amount of money they gave you, exceeds the fair market value of the goods or services that you gave them. So, a couple of examples of this, if you were having a fundraising event like a benefit reception, and you charged, they made a $100 donation to get in, but the actual cost of having them attend that reception and feeding them was $50. That donor could only deduct $100 minus $50. They can only deduct the $50. The fair market value has to be taken out of what they got. So you can see here's an example of what we've done at USBC when we give free gifts in our holiday campaigns. We have to do this where we say, we're a 501c3, your contribution is tax deductible to the extent allowed. If you ordered one or more of these items, if you got this good from us, then your donation is tax deductible less the fair market value of $2.50 per poster and $1 per postcard. This was a pretty small one, but we had to disclose this to you if you were accepting that free gift as part of your donation. So that's just something to be aware of. Again, not something scary, but just to know that if you're doing something like this, a free gift, if you're doing an event like that where people are making a donation, you want to give them that tax deduction credit, but they're also getting something for that donation to that fundraising event by attending the event. You want to make sure you acknowledge that fair market value in the acknowledgement. So. A couple of other resources here, and then we'll get into some questions. So get ready. Again, if you want to ask some questions, you can either type into the webinar control panel, or you can raise your hand, and we'll see that and unmute your line. But these are a couple other resources that we've found to be very helpful. The National Council of Nonprofits and Grant Space, I think, are especially helpful with some of the state and IRS filings. The National Association of State Charity Officials is particularly a resource around the states in particular and the state filings, because that's that group that has really delved into trying to make some sense around all the different requirements and to come up with that unified form for national organizations to use that have to do this in so many different jurisdictions. I want to just show you one other resource here before we go to questions, and that's this resource website from Venable, which is the nonprofit legal firm that we use at USBC. They are a really fabulous law firm in DC, and they have a nonprofit organizations practice group that has all of these great resources, this whole archive of recordings of webinars about different nonprofit legal topics. And so since we last met and had this Power Tools webinar, this first one, Ask the Expert, everything you wanted to know about nonprofit tax law, happened, I think, in April. And so that one is now up in the archives where you could view the recording. So I recommend that one. There are some other ones they have in the archives about bylaws. They had one about what nonprofit employers should know about family-oriented employment laws, including the supporting working mom, or the break time for nursing mothers provision is in there. So some good, really great resources there. And then you can also get their regular newsletters and articles and alerts, which are really, really valuable. They have some great regular alerts about things like requirements for contracts and grants, if you have different types of funding, all sorts of things that you should be aware of. So really highly recommend signing up and checking out both of those things. So okay, so back to questions. Let me pop back in here. And I don't know, King Kinney, if you've probably been watching the questions, if you want to start us off?
Sure. Thank you, Megan. What a fantastic presentation detailing all the various components to stay in compliance with filing and reports. And I can tell that I know that I and the participants will go back and review certain sections of it. How do we register for charitable reporting and all of that. So do please share this free webinar link with your partners. So we have a question from Phyllis, who says that what if Cars for Charity designates our coalition to receive the proceeds from a vehicle auction and the amount is $1,000 to $2,000. So Cars for Charity will give the receipt from there, and how might this be handled by the coalition if they have an auction and they give a donation of $1,000 to $2,000 from a car donated?
Yeah, sorry, I'm reading the question. I'm looking at it. So I wonder if maybe we can unmute Phyllis's line, because I'm
Sure.
just trying to make sure I understand. So actually here, Phyllis, I'm gonna unmute the line and ask you a follow-up question here. So am I understanding it right that an organization called Cars for Charity is running the auction, and an individual donor donates a car to this auction with the stipulation that when you auction this car off, I want the proceeds to go to your coalition. Am I getting that right? And your line is unmuted, Phyllis, if you, oh, she doesn't have a microphone. Okay, she's saying yes, that's how it works. Okay, thanks, Phyllis. Okay, so I'm getting that right. Cars for Charity will give the receipt. Yes. Okay, so that's what I was gonna say. I think if the donation is being made directly to Cars for Charity, they are the ones, and it sounds like this is what's happening, they're the ones who are acknowledging it. They're the ones giving the receipt to the donor. So the sort of legal financial transaction is happening between the donor and Cars for Charity. So my thought here is that you, the coalition, are not required legally to do an acknowledgement. It doesn't not falling into that disclosure requirement where you must send them, a particular formatted letter according to the IRS. That's not your responsibility, but it's probably a good thing politically, in terms of your reputation and your gracious acceptance of this gift. It's probably a good thing to send them an acknowledgement letter or thank them in some special way, because that's a really cool donation. So I would say yes, definitely you should do some sort of acknowledgement, but it's not a legal requirement because that donation was made to Cars for Charity and then just earmarked for you. So That's a really cool. I'm going to have to look up cards for charity and see if they're everywhere. Very cool idea.
And this is something that the link is on your slide, but there was one question which says we're already a 501c3, we filed the 990N, but we didn't know anything about the registration. And where can you clarify where we need to register for the charitable reporting? And I think that link is on the slide, right, Megan?
Yes, exactly. Here, let me pop back because I know a couple people asked that question. While you're asking the next one, I'm going to pause for a second and I'm going to go find the couple of links I want to highlight so I can show. Here, okay, here's one of them. So here, this is the slide with the link with this NASCO list of state offices that regulate charitable solicitations. So this is the one here that I would click, and that will take you to their directory of all the different state offices, and then you can find your state and click through. And then again, on those particular, once you get to the state's website, I know every state's got different levels of navigability, if that's the word. But look for something called charitable registration, solicitation. Search for those words if it's not immediately obvious, but because that's typically the terminology that they're using is charitable solicitation. So, okay.
And then we have Marcia who says that they're going over that limit, jumping to the next level for the first time this year. So anything to keep in mind as you go, like you've been under 50 for so long and then jumping to the 50 to 200K range?
Yeah, so for the minority here on the call, for the 10% that are over the 50,000, especially if it's your first time doing a 990 EZ, again, I would recommend a couple of things. One is to go to that stayexempt.org website and check out the IRS, their individual trainings and online webinar modules that they have. I didn't want to repeat all of their stuff, but they do have some really great resources there. Another thing that I'm going to do is, we're going to post on the website, I was going to post one of our USBC donation acknowledgments. I'm also going to post, these are of course publicly available too, and I'm going to post examples of our 990 EZ and 990 in case that's helpful for folks to see what we've done and how we've handled things like the program descriptions and so on. The 990 EZ is going to be certainly more more laborious than just a postcard, but what it will essentially do is reflect out from your financial statements. So what I would actually recommend when you're getting to that point of being larger and being getting up above that smaller amount of money, that you probably are getting to a point where you want to make sure that you really have professionally done financial statements, or that you have somebody. Maybe it's somebody in your coalition who has accounting experience, so that you have somebody doing your financial statements and monitoring that who has experience. When you're in the smaller grouping, when you're $5,000, $10,000 a year, or you only have one or two sources of money or one or two big events per year, and it's very easy to keep track of that. That's one thing. But when you get to be a little bit bigger, you want to make sure that you really have those proper financial statements done. And then when you have the financial statements set to go, they just transfer right out into the 990. And the 990 becomes a regurgitation of, all the different categories on your financial statements will map right into the 990. So that'll be a lot of what it is. You'll also have various different questions that they ask you about your practices, governance practices, financial practices. So I would also recommend going in preparation and just like reading through the form, even if it's the most recent form from the prior year. That doesn't change very much from year to year. So if you read through and see, okay, what are they going to ask us, so that you are prepared for that. There were some other changes that they make sometimes where they'll ask questions about, do you have a policy for this, or do you have this or that? And so you just might want to be aware of what sorts of questions you're gonna be asked. So those are a couple of recommendations. And then, like I said, I would also recommend going through that IRS training module, and really at that point looking for some outside counsel. And again, it could also be another option for transition is that if you still have some somebody internally doing your books and you're not at the level where you're paying somebody yet to do accounting, what you could also do as an interim step is just have somebody that you pay to review the tax return with you and to do the 990 with you. Kind of like we do sometimes personally, right? I manage my own finances in Quicken, but then when it's time to do my tax return, I have somebody who comes and consults with me. So you could do the same thing for your nonprofit, where you have somebody help you out just with the Form 990. So that's another thought too.
Okay, one other question, and that is, what if a 3-year average income is over 50K? We just discovered this after filing our postcard for 2013. Do we need to refile for 2013 or just move on if a 3-year average is more than 50?
3-year average. I am not sure about that. I'm going to have to go back and look. It's been when I really read through all that detail was back in March. So let me confirm the details of that one I have the whole publication printed out. So I'll look into that one a little bit more and see what I can find out. I imagine probably if you've already filed, you're going to be set, but I want to make sure I tell you the right thing.
Okay. And I think the last question is that one of the is that we sometimes reach over into the next state, and is there any problem with that? Not so much for fundraising, but for collaborative work, and so emails and other things are there on the mailing list, I think, with colleagues and work. And is that something that the coalition should be keeping track of?
Yeah, I think and actually it looks like this question might be about Mexico. Is it reaching over into the next country? That would be different.
Oh, it is. We reach over into Mexico, yes?
Yeah.
I was thinking New Mexico. No, it's Mexico.
Yeah, well, so I guess those are two different questions. If you are, sometimes reaching into, transacting business in another state, I think the things to be aware of, the things that might trigger needing to file or have requirements for that state are, some of the things that we talked about. If you're really having an office or conducting, permanent business in that state in some way. Another example could be if you have an employee in a neighboring state, you might have some additional requirements around that employee. And those would be different from, again, different from the charitable solicitation. That's where, so another possibility would be if you are directly targeting residents of another state with solicitations for donations, that is going to likely trigger you under those Charleston principles. Remember, I was giving that example of, I sort of passively wandered in from another state and made a donation to you. That's not a direct target. But if you are directly targeting people in a neighboring state, then you may be triggering a need to register for charitable solicitation in that state. And so in that case, I would recommend that you do read through those Charleston principles and just make sure you're defining your activity correctly. But it's going to be things like that. If you're just, you had a joint event one time, with your neighboring state coalition or something like that, that's not going to be a big deal. But if you're really transacting ongoing business or having an employee over there or on, targeting donations to people in neighboring states, that would be different. So then the question of Mexico, if you're doing business in another country, that one I fear in terms of the legal tax stuff is outside of my realm of expertise. It sounds like from the questioner that they're really talking about not so much for fundraising or transacting, but just because you have colleagues there and you're communicating, coordinating, connecting between you, and I don't believe that triggers anything in terms of if there's no money changing hands, there's no transacting, I wouldn't think that triggers anything in terms of IRS. It would be different if one thing the IRS will really ask, and you'll see this on the Form 990s, they'll ask if you are granting money to foreign countries. That's a different story. And there will be some different 990 questions and requirements about foreign granting, but I think that would be pretty rare for most of us if we're state-focused or U.S.-focused. But if you just have colleagues that you're coordinating or talking to, that shouldn't be a concern for anything. It looks like we have another question of if they're not nonprofit or tax exempt, but do have an EIN, do you have to file? So that's a question that I think if you have an employer identification number, then there is an entity in existence, or there must be, or there should be an entity in existence behind that employer identification number. Otherwise, that entity is just an individual. So if there is a organization, an entity in existence, even if you haven't gotten your IRS tax exemption, they do want you to file. If you're a nonprofit, whether you've ever gotten an exemption from the IRS, they want you to file a postcard. So that's the short answer to that. But if there's more I am missing about that particular situation, let me know. We can chat offline.
Thank you, Megan. I
Good
think
questions.
that's great questions, and that's the last. And we just have a comment from Ann Davis, who's easily spent 100 hours learning the nitty-gritty of the Ohio state nonprofit laws, and she says almost all of this is online. So pretty much most of the submission for other states should be online as well.
Yeah, ours have been gravitating online for our states that we work with lately too. So makes it a ton easier. Gotta tell you. So.
Well,
awesome.
Great. Thank you, everyone. And our next one is going to be on July 16th, and it's going to be advocacy and lobbying for nonprofits. So stay tuned for the registration information for that. Meanwhile, you will be able to access the recording and all the resources, the PowerPoint, as well as all the links by Friday. We should have it on our website. Thank you all.
Great. Thanks, everyone. Take care.